Good evening. My name is Sybil Mullen, and this is my week 3 assignment. This assignment is my topic subject is actually tools for financial statements analysts. So what are the tools for financial statements? So the tools for financial statement analysts basically refers to the different methods with which financial statements analyze is actually carried out, and depending on the purpose for which the statement is actually for. So this may include ratio analytics, comparative study, analytics of presentation and disclosure methods, and analysis of notes to accounts. Explanation of the calculations and concepts. So the calculations used in carrying out financial statement analysis vary depending on the users and cover a wide range of analytics. Take, for example, the gross profit ratio, including gross profit versus turnover, or the net profit ratio, including net profit versus turnover. Once we calculate these ratios for a particular organization for one period, these can be used in a comparative manner, including comparing an organization's own ratios with its previous period's ratio or the previous year. Or you can also comparing an organization's ratio with the competitors in their industry if that data of the competitors' business is easily available. There are various other ratios which can be used in financial analytics, including debtors turnover ratio, debt equity ratio, operating income to non-operating income ratio. Other than ratio analytics, simple scrutiny of financial statements gives insights to the financial analytics of the company. For example, while analyzing financial statements, it comes to our notice that the turnover has decreased. Still, the debtors, including trade receivables, have increased, and there are no bad debts written off. This shows an anomaly in the financial statements. So the application of the tools for financial analytics, how would you explain how they would use it? So for the entry-level professional, basically they're going to be calculating simple ratios like gross profit ratio, net profit ratio, debtors turnover ratio will help as well. Will help entry-level professionals to make an insightful decision and further take an informative decision or to reach the appropriate conclusion. Basically, as an entry-level professional, you would be using these tools to analyze your company's budget. Mid-level professional. Mid-level professionals shall go on to calculate these ratios and compare them with industry ratios, an organization's own ratios from previous periods, comparing them with the budgeted financial statements, if any. So basically, as a mid-level professional, you would use these tools to evaluate business plans and conduct benchmarking. The executive level professional. While carrying out financial analytics at the executive level, not only ratios are looked into, but other factors are also looked upon, including like how much part of an entity's profits come from normal business operations and how much comes from exceptional items or one-time items. And when I was beginning to write this and understand it, gave me pause. I work in the industrial electrical industry. I work for a manufacturer's rep company, and basically right now we rep 47 different manufacturers. One of them happens, and that's one of my lines, is Hoffman Enclosures. So last year in 2019, I helped close a $1 million deal in Wireway for Hoffman through one of our distributors down in South Florida. Now this Wireway is being used for Interstate 95 and adding more sun passes. Just basically, the fiberglass Wireway is actually what's used when you're driving your car through, and it's what's helping hold the components to take the pictures and the cameras and all of that. It's all housed in the Wireway. Basically, that's a one-time deal. So my boss, of course, the principal of the company, he would be sitting there trying to realize, okay, that's $1 million in profits, that we've sold. That's a one-off. So how are we also going to make up that money, because we're not going to get that back, and make more? So it just made me think of, that's something that my bosses are actually thinking of and analyzing when they're looking at the numbers when they're going to conferences like NEMRA. So on an executive level, you would use these concepts and tools to coordinate the annual audit and prepare financial disclosures. And an ethical issue. So financial analytics is always calculated in terms of a percentage or times ratio. So when things come to percentage terms, they may be fudged and put in such a fashion as if the performance is very great. So wherever possible, mentioning absolute numbers along with ratios or percentage terms would be the best way to address that issue. For example, many times organizations write in their financial results 100% dividend payout, which looks quite lucrative to any layman, but when the numbers are mentioned as an absolute figure, this problem gets addressed, including users come to know how much the dividend is actually paid in absolute terms. Thank you so much. I hope you enjoyed my presentation. References.